Even though interest rates are at or near historic lows, real estate is having a hard time. Even though the global economy is apparently best ever, 10 years of prosperity, we have seen nothing of the sort in real estate. Look at what we are dealing with. Overinflated asset prices and people are tapped out. We know the stats and eventually it has to pop. Just like chewing gum, the bigger the bubble, the more mess it will create when it pops. You came here for the truth, so let me unveil that for you. Today we're going to look at real estate all over the world. I want to talk about US first. I want to talk about Australia. We're going to look at the UK. Let's begin by taking a look at this. This information comes out of Reuters, basically pointing out US new home sales rise to a near 1.5-year high. You see this information here, I'm bringing it to you. Even though it's positive, I'm consistently accused of only showing the one side. Let me explain to you that the media only shows you one side. You're seeing the new home sales rising. Why don't you look at the existing home sales year over year falling? I believe that's 13 months in a row. Did they show you that? Of course not. Look at this. Home sales fall 4.9% in slow start to spring buying season. This is the time when you should be seeing the rise, when you should be seeing the inventories falling. As new homes come on the market, they get bought up right away. This is the hot time, and yet we are seeing the slowdown occurring. All of this is on the back of interest rates being at historic lows. You can get a mortgage very cheaper right now. We were looking at the mortgages going up to almost 5% in the United States. Then that came down to closer to 4%. It had risen a little bit. However, if you look at it on a historic basis, it's so cheap to buy a house right now in the United States and just about everywhere in the world. Sales of the cheapest and the swankiest homes are tanking, but for very different reasons. So you're looking here at the point form. Sales of the lowest price homes, those below 100,000, were down 13% in March compared with a year ago. This weakness on the low end started 2 years ago as demand began to soar amid very tight supply. That's what they're saying for these. This is really a subset of the bigger picture, but I think it's important to note. In contrast, sales of high-end homes were surging in 2017. $1 million plus sales were up nearly 31% annually that year. This March, sales in that price class were down 11% annually, even though there are plenty of those homes for sale. Look at areas of New York, for example, where you have multi-million-dollar homes. Nobody's buying them. They have to bring the prices down. Nobody buys them. They bring them down further. Nobody buys them. They pull them off the market, put them on a few months later, nobody buys them. There aren't as many buyers for these really high-end homes as they thought that they would at this time a few years ago. They were thinking this is just going to go up forever. By 2019, I'm going to make such a big profit. We don't have to worry. Now they're underwater, or they haven't seen the appreciation that they were promised or that they were thinking they would get. In California, where the tax burden is high, some people are finding they have to move out of state to afford to buy a home. This is a topic I discuss very often. I will be covering one actually, maybe later today, maybe tomorrow, but talking about that migration that is occurring within the United States. A lot of people don't understand this, how the actual population of the states works. You have to look at people who live in that state currently moving to a different state. Then you have to look at external migration. So in the example of California, you are seeing people living in that state currently that are leaving. More people are leaving than coming into that state. However, if you factor in external migration, then you may see the population rising, but the people who live there right now are leaving for cheaper places. The same thing goes for New York. In Manhattan, the number of home sales in the first quarter of this year fell to the lowest level in a decade, and it was 16.4% below the 2-decade average of all quarters. It's huge. It's actually quite significant. Now, yes, the prices have risen to $1 million, and that is excessive. No matter where you look around the world, it's extremely expensive. Rent goes for sometimes $4,000 for something relatively small in this area. But look at what has changed, the trend here. We are seeing it going down, down, down in places where they said it would be impossible. Well, now we're seeing it being possible. Listing inventory jumped nearly 9%. The more of these places that come onto the market, obviously that's going to be negative for the sellers, very positive for the buyers though. This is the official government statistics in the UK House Price Index, the newest data, which is coming here as of April 17th. Okay, just to make it very clear, I'm always facing heat because it's a February 2019 number. David, why aren't you covering the most recent data? This is old news. Look at the bottom of the page. Release date 17 April 2019. Let's show you some charts from that. Average UK house prices peaked at 232,000 in August of 2019, and we can see that it has come down ever since. Now, obviously, you see 232,000. That's low compared to areas like London, but just to give you an idea, I'm showing you this. Whenever you see national averages, it's always really bad to look at. I'm not a fan of them myself, but it just gives us a good starting ground. So let's move further into the details. House price growth in the UK has slowed since mid-2016. I mean, come on, look at the trend that we have seen right here. I mean, it's been going on for years, okay? This has been persistent. Annual house price rates of change, UK all dwellings from January 2006 to 2019. And obviously during the financial crisis, we saw the dip, we saw it return, but ever since then, it's been weak. Now, obviously with everything that's been happening with Brexit, this has put a big question mark around so many businesses, so many industries, so many companies, and so on. But really, it's being used as a scapegoat, because when I look at Brexit, when I think about it, what has changed over the last few years? Think about this. What has changed at all? Well, the answer is nothing. Nothing has changed. Brexit hasn't happened. There hasn't been any changes inside of the government to actually make a difference, okay? We've had nothing significant occur, and yet it's caused such a problem. Well, why not make it happen, or why not let it just fall? You have to figure out what the people want. If I remember correctly, the people wanted a Brexit. You still can't make it happen. You're falling short of what the people want, and unfortunately, this will continue for the foreseeable future. October apparently is another time. It's going to get pushed on. It's like the trade deal between China and the US. It's going to be a 90-day hard line. That's it. It's over after that. And then 90 days comes. Well, don't worry about it. We're going to take up to 6 years to figure out all the details. So let's not worry about it. Push it off into the future, kick the can down the road. England house prices remain the highest in the UK. I don't think that's a surprise to anybody. You could see the breakdown. England, Wales, Scotland, Northern Ireland here, just showing you the direction. And over the years, they have come up. That is obvious. You could see that for yourself. However, we are seeing this slowdown that has occurred along with the prices in England. Breaking it down, you look at the UK overall, it just showed you year over year not looking too good. Southeast house prices falling over the year for the first time since 2011. All dwellings, annual house price rate of change year to February 2019. This is quite significant, just showing you over the last year what has happened in London as an example, coming down nearly 4%. I can't remember the rate of change since the peak, but London has been doing quite bad over this period of time. Just wanted to show you that, give you an update on the prices, because a lot of people, they are really over their heads in the amount of debt that they got themselves into. London continues to be the region with the highest average house price at 460,000. Looking at all the different areas, the green line there happens to be London, but the bigger they are, the harder they fall, and that's what we're seeing today. Not just in this area here, but also in Australia as a good example. And I'll get to that in a moment. I wanted to include this here, this information from this document of this particular corporation, just showing you the London sales market is in a prolonged downturn, current uncertainty surrounding Brexit impacting consumer confidence. I really don't know about this and how much of an impact it really does have. I know obviously there are trade issues happening right now. That's caused some uncertainty, but But if you think about it, what has changed? That's what I want to know. Well, look at this really quickly, okay? I don't want this to go on too long. You're familiar with the price falls. Australia's capital city, average house price is down around 7%. By the way, last time I did a video about Australia, I mentioned capital city, and if you were reading on the page, it said the capital of each of the states, but I had seriously maybe about 30 to 40 comments telling me that the capital of Australia is not Sydney. Of course, it's not Sydney. I'm aware of that, but I guess people weren't reading and they just commented anyway. Here we go. The total fall is much worse in Perth, down 18% from the peak, and has been especially sharp in Sydney, where prices are down 14%. You are talking about a population, a significant population, down 14%. Perth is down even further, almost in a bear market. I'm sure if you look at particular neighborhoods in both of these cities, they are in a bear market. You can see the other areas here in Australia that are not doing well. Although they have come up very far, it looks like they can drop down hard as well. Loans in negative equity, this is as of February 2019. You can see in Australia, this happens to be about 3%, but depending on where you look, these numbers go very, very high. In fact, in some areas, it's going what looks like perhaps 13% or more. Now, that is not good at all to see that, because you know that there's going to be massive levels of default and bankruptcies, and you're going to have other types of debt that are going to have to be delinquent as a result. Dwellings under construction is a bad sign in this case here. Look at this. We are seeing a massive accumulation of the amount of buildings that are going up in Australia. But I mean, come on. Look at this around in Vancouver, Toronto, New York, San Francisco, LA. Everywhere you look, they're building, and they always do this right at the peak. I've noticed this time and time again. Most typical example is Dubai. Right around the housing crisis, they had half-built skyscrapers that they abandoned. That's a very good example. This, we are seeing the same thing today. You're going to put so many houses onto the market, nobody's going to be able to buy them. People are going to be sitting there with their negative equity, and this is going to put a further burden on all the homeowners who are already underwater or are near there, and you're going to watch their property values sink. That's all for this video. If you found it informative, if you thought that it was jam-packed, peanut butter and jam-packed, then give me a thumbs up, give me a like on the video. If you want the real deal, the details that you didn't get in school, the foundation history, the asset class is all about real estate. I talk about debt, the central bank's interest rates in both of these books. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. People are leaving California. You got to know what the details are. Check out this video right here, and I will see you there.